Okay, so FICO up a lot today in the pre-market, almost 12%. So what happened? Earnings came out yesterday. I did a video recently on FICO where I mentioned that I thought it was underpriced and I had picked up a few more shares. I don't have a lot of this. I think I have like 6 shares maybe. Very small position for me, but I have this in what I call the coffee can portfolio where I just stick things in that might be a little pricey now and that have just long runways and I think will do fine over time. And this is one of those ones that I stick in there and I hope I'll never sell. Other ones I have in there that I think from time to time look very pricey but that I just probably will never sell are MSCI and SPGI. Very great moats, very low cost to increase sales. And if we look at the 5-year chart, it went straight up and then it's about half off its all-time high. And why is that? There's 2 reasons. One, things that deal with software now are being all sold off because of fears of AI disrupting them. And 2, this has been targeted by the current administration and the head of the FHFA, Bill Pulte, who is many consider a moron. So who's Bill Pulte? If you look at the Pulte Group, which is a housing developer, it was started by his grandfather. Bill Pulte is a Nepo baby, never really did much in his whole life, but when his grandfather died, he's the only heir, I believe, and he was put on the board of Pulte Group and was so incompetent that he was kicked off the board of the company that his grandfather founded, of which he is a huge shareholder and literally has his name on it, but he was kicked off the board because that's how incompetent he is. And he was put in the current administration as head of the Federal Housing Finance Authority. And for some reason, he's targeting FICO. He thinks that $10 is outrageous to charge for a FICO score. And he's trying to pressure them to lower prices because on the thousands of dollars that you pay on a housing closing, he thinks $10 for a FICO score is too much. And he's pushing the competitor's Vantage score, which costs, I believe, $1. And he says that FHFA can accept Vantage scores instead of FICO scores. But that doesn't matter. And I'll go over why. So these mortgages are pooled together and sold to investors like pension funds and overseas investors. And a FICO score is very valuable. So the Vantage score, which many people call a FICO score, is not worth as much. So you could use a FICO score instead of a FICO score, but if you're getting less money for the pool of mortgages, why would you do that? You're trying to save $1 and you're losing 10 or 12. It doesn't make any sense. So there's another company called Moody's which rates corporate bonds, and you could sell bonds without a Moody's rating, but you get less for those bonds. So that's why you use those Moody's rating. And the government can say, hey, you're allowed to use a competitor, but you're allowed to do that now, and you would get less money for it. So it's not the fact that you're allowed or you're not allowed. It's the fact that you get more for using a Moody's score, you get more for using a FICO score than you do for not using it. So even though Nepo baby Bill Pulte has been taking shots at it, even though there's concerns that AI will disrupt everything, FICO's still doing great. Even though the price has been cut in half, 32 times earnings still seems pretty pricey for anything except FICO. But FICO, I think if you bought it at this price and just stuck it in the drawer and looked at it 5 or 10 years from now, I think you'd be happy. And this isn't investing advice. This is just how I think about the process and a position that I own that I don't plan on selling. But let's go over some of the numbers. So despite the fears of AI and despite the fears that Nepo baby Bill Pulte is going to destroy this company, revenues are up 39% year over year. And software revenues up 7% year over year. Net income up an incredible 63% year over year. Take that, AI. Take that, Bill Pulte. And free cash flow is up 28% year over year. And they did buy back $605 million worth of shares. And the average price is $12.51. So it's currently, even after the 12% jump today, you're going to be able to buy back. You're going to be able to buy shares of FICO at cheaper than the company has been buying back its own shares, if you're interested. Again, not telling you to buy or sell, just telling you what I see. So here's business to consumer up 5%. That's when you want to check your own credit score. And here's business to business when you are applying for a credit card, when you're applying for a mortgage. And that's up 72% year over year. So even though Nepo Baby Bill Pulte is attacking this, even though there's fears of AI disrupting FICO, it is doing gangbusters. So as I said, I don't have a lot of shares on this. I have less than 10. But this is one of the ones that I call the coffee can portfolio, where I stick things in that might have looked a little pricey, but I think over time will still do fine. And that includes this MSCI and SPGI, which all have incredible moats and seldom go on sale. And now this one is on sale. So I may take another look and add a few more shares, because even after the bump, it still looks cheap. I was waiting to see how the earnings played out, to see if any of the fears of AI or of the current administration targeting FICO will play out in terms of the numbers. And my thought was that it wouldn't really matter that much, because no matter what the administration does, what your customer wants is what matters. And when you pull these together, you get more for a pool of mortgages with a FICO score than you do without, and you would get much more with a FICO score than you would with a FICO score. So I think this one is fine over the long term. I am fully invested, and I did make a big purchase recently in Nintendo, so I will take another look at this, but it's very hard for things to pass that investing hurdle for me lately, because I'm fully invested and I don't want to use leverage. But I definitely will not sell the shares that I have even after today's 12% bump. And if it pulls back a little, I may consider buying more, just based on the earnings report, because the movement of the stock price doesn't really tell you much, but the quarterly earnings do. And so, if you see the stock move up, you see the stock move down, that's just noise. A data point is earnings or other things like that, and that's what you should be looking at quarter to quarter, in my opinion. That's how I invest. You invest how you invest. I don't tell you what to do. But anyway, that's my thoughts for this today. Like and subscribe if you want to see more videos like this. If you want to support the channel, there's a Buy Me a Coffee link, but don't feel like you have to. And if you have questions about this or any other stock, just leave them in the comments and I'll see if I can answer it. Have a great day, everyone.